GETCRACK. Wake up, motherfucker.
Feel like I should, feel like I should, feel like I should, feel like I should go. Go. Feel like I should go. Feel like I should, feel like I should, feel like I should, feel like I should go. Feel like I should go. Feel like I should, feel like I should, feel like I should, feel like I should.
Howdy, howdy, howdy. It's 2024, the year of our Lord 2024, November 24th. All right. So, interesting things in the overnight market. So I decided to come up here and see what we're going to plan for tomorrow. So I don't know if you guys are going to trade for Thanksgiving week or not, but yeah, there's a lot of potential out there, I think. So yeah, remember to like and subscribe. You gotta do that, and donate. Just give the money to Portia. All right. So yeah, Sunday night. Let's go. Let's do this. Let's see what we got here. No news. Nothing's going on, but market is up for the futures. So I see that. So, and I checked out some overnight markets on the Robinhood and see how that went. Interesting stuff. But let's cover Bitcoin first. Bitcoin's going to be more important here to talk about this. So I got my 40-minute chart. So let's see. We see some support being made here around this area. Okay. So 95,600, 760 around there. So it bounced off of it before futures market open. We're up here again at 97,400. I don't know if I'll pull back or not. It could just move forward from here. But if we look at the 4-hour chart here, each candle being 4 hours, we have a starting to dip 18 moving average on the 4-hour. So that's going to be some headwinds here. And like I discussed yesterday, looking at this candle here on Friday, I expected it to dip over the weekend. It did that. So that erased all the gains from Dogecoin, Litecoin, all the other altcoins that we were talking about yesterday. So yeah, I don't know. Are we going to go sideways here? So this could be a bound. It could be going sideways between 95 and 98,000 for the rest of the week until Black Friday. So Black Friday, I assume something will happen for options and futures expiration for Bitcoin and Ethereum, because they'll all expire on the last Friday of the month, unlike stocks, indices, and all that, which tend to gravitate towards the third week of the month. So last week of the month, okay? Oh, Radio Foreman's here. Financial nonsense. Well, thanks for the donation to yeah, John got your donation. Thanks a lot for that. So financial nonsense. Well, financial nonsense makes money, so that's why we're talking about it. Okay, and if you want comedy, well, I mean, I already do that as well. You got your King TL versus Solid Snake the past week, so you should have been watching that. So, there's people that can multitask, and I don't even need to do much. Somehow things happen when even I'm not around. But yeah, let's look at hymns. Actually, let's look at hymns. Because King TL has erectile dysfunction, and let's look at the stock right now on overnight. So if you've been buying this, it is up 3.5% overnight on Robinhood. Not sure how that will be on the open, but hopefully it's going to be continuing with the solid snake, blah, blah, blah. Let's see here. So let's go to that. Hims and hers right here. So yeah, I'm pretty curious about this because what I see on the overnight for the XBI, if you look at this, XBI biotech ETF, it was over getting a high of 2. That's probably just an initial pump. But overall, the IWM is up 1%. So Russell 2000 up 1% as well. So I'm going to be watching this, and I'm gonna play a video. I haven't watched it myself, from Tom Bowley about the IWM and mid caps as well. So we can watch over that, and I'll give some commentary on what I think about it. I think it's a very simple. He breaks it down pretty simply, and it was an old presentation about a week ago, so I was watching that. Let's see what other ones I have seen. Oh yeah, this is my favorite, right? You guys know this one, SMCI. Well, SMCI is about to go up 6% in overnight. That means I don't know what's going to do on the pre-market if it can hold 35. If it can hold 35, I might recommend people to do something more aggressive. So if you're trading, you can use this ETF. Yeah, this is going to be crazy. Yeah, I think. Let me see, SMCI, SMCX. You can use the SMCX ETF. Okay. I wouldn't recommend this, but here you go. So we can do the XMCX ETF. XMCX is 2x ETF of SMCI. So it's a single stock ETF. So on Friday, it's up 20 something percent, 22, 23%, because SMCI was up about 11%. Okay. Very risky. I did not recommend it while SMCI was going down, and I was telling you guys to buy it up. Now that it's back up, because we have to look at the overall picture here, we're close to 35. If it can get over 35 and hold that level for most of next week, then yeah, you could try SMCX because it'll shoot to 40. Okay, so that means if SMCI is going to shoot to 40, let's see. How much is that from here? Because if I'm hoping 50, honestly, but I mean, we're just gonna say minimum 40. Okay, let's just say it gets here. So that's 26%. That's like 50% on SMCX if you want to risk it. Pretty risky. I think the only semiconductor earnings is ADI. Okay, ADI will report Tuesday morning. It's not a really big influence on the semiconductors, but if it does well, maybe SMCI will just follow it anyway because it will follow the index. Because right now, SOXX is here and looks like pre-market it's up 2%. Not SOX is up 2%. SOX L is up 2%. Okay, so I've been buying this after the Nvidia. So it was at $28.50 about on Friday. Now let's see if we get SOX. Let's say it can recover up to here. Okay, so SOX goes from 216 to 225-ish. So that's about 4%. So that means SOX L can go up 12%. So it can recover that really quickly this week. 12%. So about $32. So $28 to $32. But more importantly, SMCI will follow it with it. Because I think it's just a momentum right now. It's just following momentum. I don't know if it'll hold it on pre-market, but I'll be watching that. If it does, yeah, I'm gonna do SMCX. Okay, that's about it. Well, Radio Foreman, I mean, financial stuff isn't gonna be interesting. I'm gonna roast you for boring me. Yeah, you can go ahead, do that, I guess, in chat. You can do whatever you want, bro. I mean, hey, I'm just filling in time because I got nothing to do right now. It's Sunday, and I'm just waiting on the next Ruby and Ava stream. Okay. Anyhow, okay, so we got that. What's the other ones to cover? Oh, hymns. That's right. I did do hymns, didn't I? Yeah, I did that. And I was going to talk about this one. Let's talk about RXRX. So RXRX is one of those bottom feeding stocks. So if you look at the banner at the bottom, you'll see all the stocks I recommend at the bottom. So yeah, if you want to buy a bunch of this below $6, it looks like pre-market, it is going to be above 6, maybe if it holds this overnight price. Okay, I'll show you that. What a waste. Blah, blah, blah. Man, Radio Foreman has nothing to do today. Come on, Jeremy. Don't you got nothing to do today? I think you got to prepare to go to sleep, don't you? Don't you have work or something? Anyhow. So, this is it. Yeah, up 6.6 something percent. So, it's going with I think the small caps and mid caps, all right? So, I think this might be the play to make. So, I had Nova last week. I was talking to you guys, and RXRX probably this week. Let's see how this one goes. All right. And yeah, that's good. And I also have AI on the watch list. It's up 4% overnight. Okay. So all these like junky type stocks definitely looks good. Okay. Now I'm going to do some point and figure work here for Tesla. All right. So we got some point figure here. So I'm going to count the columns and we're going to see how far Tesla could possibly go. Okay, conservative count is 1, 2, 3, 4, 5, 6, 7. 7 count. Okay, 7 times 3. 3 here, the reversal. 3 times 7 is 21. And so we got an 8% box size. That's about 1.08 to the power of 21. All right. And that should give us what we need here. So 1.08, if you follow me, to the power of 21, that's 5.03. Okay, that's about 5. All right, you got a factor of 5. Now, let's look at the low here. Low is $139.49. So that's the bottom here. Okay. Take that. And I'll take the 5, multiply it. 9.49. So that's about 700. Okay. One target is 700. And the next target is 278. 84. 884 multiplied by 5. Okay. So 1,400. So 700 to 1,400. That should be the next target for Tesla. And I think that's going to be important. So I'm going to show the chart again. Okay, there you go. Now, show the chart again. Yeah, I know, Radio Foreman. Yeah, making money is boring. That's usually how it is. So here we go. So you got the Wyckoff analysis here. All right. So you can see, I think we're already past, well past phase C, going to phase D. We probably already passed that already. Yeah. So this was like the test, the final test on phase B was in January 2023. You had the last test made here around April 2024. Okay. And then now we're going to get to the final thing, phase D. Okay, now we're going to phase E. I think that's where we are right now. Okay, so that's why I'm going to say 700 to 1400 on Tesla. You ain't making a shit. Okay, Real Foreman. Oh, you can go look at the other streams. I don't think I need to keep posting my account numbers. That's why I don't need your help. Anyway, you gotta be a better troll, man. You gotta come here with like the white jaw gold or something. Hey, what's up, San Jose? Shit. All right. That's enough fun. Crazy, ridiculous. I don't got time for this. But yeah, it is what it is. You gotta do. Here you go. All right, you can see that account trades made on Friday. All right, I'm only gonna keep a GameStop and SMCI right now. I mean, I kept selling SMCI bit by bit, a little bit. I don't know if I'm gonna do that SMCX thing this week. But if I see SMCI break 35, hold 35, yeah, shit, man, fuck it. I'm gonna throw my money back into SMCX or something and do the 2x move, because if I can make another 50%, that'll be great Christmas. There you go. Everybody can get presents after that. Yeah, should got that free room at Vegas. Oh wait, what? Vegas? You want to get to Vegas too? You want to see Formula One? Oh, they already missed Formula One. I had it for any time. Oh, okay. Well, I mean, I don't know. I don't know if we're gonna do a Vegas trip for the John Galt channel. I think we are. I think that's what they're planning to do. We have a Vegas trip. I haven't been to Vegas for quite a while myself. I mean, last time I went, it was just like I went to the Hooters, and the Hooters. It was like cheap, and my friend is such a good. Oh man, he loves doing cheap shit. He just comes in there, makes complaints about the room. It's like, oh, this thing is broken, that thing's broken, this thing is wrong, and the manager just gave us the room for free. It was just like, and then we just spend most of our time in the Cosmo. You just go to the Cosmo and hang out over there, but then the room is in the Hooters. But yeah, Cosmo, I love the Cosmo. Cosmo's probably the best. I don't know. Everybody has their favorites, right? So we'll see. Yeah, yeah, I know that stuff is way run down. Cosmo is nice. I don't know. I like it. The restaurant like nice. I mean, there's better buffets elsewhere, but it's just a nice. I like the atmosphere. Let's just put it that way. Okay, enough of that. So Tesla 700 to 1400, maybe. Okay, I got to see it break through 400 into next year. See if that happens, and we'll come back to it. Otherwise, let's start gambling on trash. The trash. So many trashes that have been going up last week, and a lot of them have already been going a couple weeks before that. So that's why I put them on the list. You can wake up in the morning, see what's up, and then when the market opens, you could put your bets in and see if it go long. GameStop, I'm hoping it can break out before earnings. GameStop does have earnings. And let me see, what are the earnings for GameStop? I think it's December something, first week of December. I don't like to play GameStop through the earnings though. Every time earnings happens, the stock will drop. Yeah, Wednesday, December 4th. Yeah, it'll come right after Thanksgiving. I don't know. Hopefully it can break out. If it breaks out, I got a good trade there. But I don't see any catalyst really, unless all the Reddit guys pump it again for no reason. And I should talk about Reddit. Let's look at that stock. Reddit stock is so dumb, but damn, for an IPO, it's been doing quite well, especially since the last earnings. Oh my god, look at this thing. So it had a low of 40. Now it's at 146. So after earnings, it was like up 40%. So the last earning was great. Really pushed it through. They're doing really well with advertising. So, hey, if 4chan had better advertising, it can't though. If you go to 4chan, look at the advertising it can do. It can't get anybody there with real money to advertise on 4chan. But Reddit, perfect place to advertise. So they've been making a lot of money on that. It's definitely overvalued as a company in any but if we got a lot of momentum already like this, I gotta say, into next year, this thing could just like go crazy. Yeah. So definitely something to watch. So RDDT. Yeah, I'll definitely put it on my list of trash that might pay off into next year if we have a very good liquidity. So the reason why I bring all that up, let's play this video. Okay. Let's play this video. So we're going to get into some meat and potatoes. Very dry, very boring. Okay, push it up.
On to a Q&A.
Okay, 7.
This huge move up where we got up over 2.
Okay, around here.
An uptrending chart. Now we'll take a look at the weekly and monthly charts.
Let's see, 16.
Chart in just a little bit. But let me start, everybody, and then wrap this thing up. So let me go ahead. I'm going to start off by sharing my screen so everybody can see. All right, I think we got everything up there now. So I wanted to start off first, and I'm going to start off. Let's go back here. I'll get to that chart in just a little bit. But let me start off with the IWM, just looking at the daily chart. I mean, I want to look at this like we would look at any chart. And what I see here is a really nice looking uptrend. I mean, let's forget about relative strength and all that for now. We've got an uptrending chart. From left to right, it's going up. That is telling us we have an uptrending chart. Now, we'll take a look at the weekly and monthly charts in a moment. But first, I mean, if I'm looking at this chart, a couple things stand out to me. One would be we've got gap support right here. That was the huge gap that we saw right after the election. So we've got that. We had prior highs that I think are worth noting right about here, which came in at about 227. You can see the rising 20-day moving average, which currently is 228.66. And after this huge move up, where we got up over 242, 243, this is an all-time high for IWM. 234 until the last week and a half, 2 weeks. We have not been able to get through 234, which was the high established 3 years ago. So the fact, that's number one. IWM has broken out. We've seen the breakout. So I'm going to be more bullish simply because of that. Before I even consider rotation or themes or intermarket relationships or anything else, we broke out. That's a positive. Now, with the in-the-money call premium, with the negative divergence and so forth that showed up last week and that we knew, in terms of options expiration, we knew that was coming up on Friday. We talked about back on Tuesday the fact that we wouldn't be surprised if we saw some selling heading into this week, toward the end of the week. It's going to help make market makers a lot more money, and they're greedy. They love to make money. I always joke that they'd sell a family member for $1 if they could. Anyway, we saw that pullback.
Okay, so I'll pause it here. So what I told you guys was options expiration. Okay, so every third Friday of the month, something happens. And usually what happens is if the stocks are moving up into that week, you'll usually see it pull back. Okay, if the stock market is going down into that third week, you'll see the market tend to pull up. They're trying to neutralize as many options as possible. They don't want either puts or calls to make too much money. They want to balance the two. So the people that are selling the options to the gamblers are trying to equalize it. Okay, so that's a tendency. And then the Monday after that third Friday, or if you have a holiday on Monday to Tuesday, usually it'll drop from that point on too. So you'll have to wait for the next Monday or Tuesday following that week, and then you can consider what you want to do then. Okay, so what's been happening last week was that it was undoing a lot of the damage done on that Friday. Okay.
So what we've talked about is the fact that this pullback is going to create some opportunities. Honestly, I wouldn't mind seeing another little bit of a pullback on Monday and into Tuesday, because that's when our portfolios will be back in force, starting at the close on Tuesday. So anyway, and like I said, Monday and Tuesday are part of this period in November, which are not great. And so maybe we see a little bit more selling. Like I said, gap support down at the 224 level, price support maybe around 226, 227. The 20-day moving average being tested right now. I think these are the three key areas. Could we go lower? Sure. Stock market can do anything it wants. This is an area, though, where I wouldn't be surprised, right where we are now, somewhere over the next $4 or so down on the IWM, I wouldn't be surprised to see a bottom form. Maybe it was maybe it was on Friday, right toward the end of the day when we bounced a little bit. I suspect we still have a little bit more downside, though. Anyway, I thought that was a really important chart. First, to point out that is not only a breakout here on this chart, the daily chart, but this is an all-time high. And you see that when we look at the weekly chart on the IWM. Here was the high in 2021 in November, 3 years ago, where we got up to 235. We made the breakout. And one thing that I've talked about, because I used to look at the market years ago and I would see a breakout. And if we went back down below the resistance level that we had before the breakout, in other words, I don't mind going back and testing that resistance, former resistance, which is now support, which was around 234. In the past, I would have just, if we broke out and we went back below 234, I'd get out because I didn't want to lose the breakout level. Since I've been doing this longer and longer and longer, I've witnessed many times where the IWM, or anything for that matter, any stock, makes breakouts and a lot of times comes back down below that prior resistance, which should be support, and it'll go down to the rising 20-period EMA and then reverse. And if I'm looking at this kind of objectively, I see a nice little trend, and a trend line is almost right at that 20-week moving average. So personally, I'm using the weakness now to get into the IWM with the idea that probably that 219, 220 level needs to hold. The 20-week EMA actually is 218. So let's say 218 to 220. That area is what I would like to see hold. That would be kind of a final line in the sand for me in the short term on a trade with or on the IWM. So I just wanted to point it out. Weekly chart looks great. Consolidation for a while. Got an uptrend in place now. We broke out. We've pulled back, maybe due to options, maybe the negative divergences. And by the way, let me show you what I'm talking about on those negative divergences. Higher prices on the IWM. This is an hourly chart. See the higher prices going up? Look at the PPO coming down. At these two highs, we had lower hourly PPO. So that's just telling me in the short term that we are starting to slow in terms of momentum. That short-term moving average is no longer pulling away from the long-term moving average.
Okay, so let me go back here to the chart. So this is my chart. All right. So you see this nice smile. This whole area here is a smile. And I got my resistance. I set it at 232 for IWM. So this is Russell 2000 ETF. And I have my rising 18 and 40-day moving average. See, it pulls back, it goes towards that 18 rising, and it bounces back up. So the chart he's showing you is already done during that week where it had that dump. But last week, we've recovered everything. So now you really got to keep an eye on all the stocks, all the little tickers that I put down in the banner here that's scrolling on your screen. So you see the most speculative one. I think I put speculative in front of it, the speculative stock. So let's see. It's going to scroll through it. I have like about to break out. Yeah, I have a whole set of them. Yeah, so you can look through all these tickers as they scroll. But yes, the speculative ones are the ones I'm looking at. So yes, it's gonna scroll. It's gonna scroll. Let it scroll through. All right, Porsche's name's right there. Porsche J, PORSHAJAYE, Cash App. All right, so we got the high speculation. You got GameStop, RXRX, AI, MindMed, MNMD, Atai, ATAI, KC, IONQ, QBTS, QUBT, Nova, NOVA, Sound, SOUN, speculative stocks. Now, not all of them are in the IWM, but we'll continue with this presentation. I think he'll show the mid-cap ETF after this.
It's actually starting to squeeze back toward one another. And when we see that, a lot of times it's a sign of slowing momentum, and we see the price action start to turn lower as well. And that is exactly what we saw here. So all of this, it started on Monday. We pointed it out on Tuesday after we had a little bit of confirmation in the second hour, or maybe in the first hour and a half. We had confirmation because we took out the low from Monday. So now we've got the warning. Then we've got the confirmation, and off we went to the downside. So that was the reasoning right in here. That was the reasoning why we got out, along with the fact that it was option expiration week, and there was a ton of in-the-money call premium on the IWM and across many individual stocks, ETFs, and so forth. So it was just a lot of risk. And so I use a lot of this information to say, no, I mean, if I love the IWM, I wouldn't buy it heading into option expiration week with a lot of in-the-money call premium and also with a negative divergence on the 60-minute chart. Doesn't make a whole lot of sense to me. To me, there's a lot of risk in the near term because of those two things. So we use it not only to think that we're going to go lower, but we also use it to simply avoid buying stocks at that time of the month. We would expect that we'll get a better chance to buy. And we were at 242, and now we're down 228. So we're getting a much better time to buy. We've fallen from the high more than 5%, probably about 6% or getting close to 6%. This is what we were looking for. All right, one more chart here on the IWM. I just want to show you the monthly chart. There's a lot of folks that have the opinion that the small caps have been in this downtrend for a long time. Now, it's true that on a relative basis, they've been in a downtrend for a long time, but they're still going higher. If you look at this 15-year monthly chart on the IWM, it's been in this steady uptrend for, except for a little bit there in the pandemic, the trade war in 2018. We had a couple of little tremors after all of the stuff we went through in the financial crisis coming up. We had a couple of these little tremors, took us back down. But I mean, near 2015, a little bit of selling. But for the most part, we've just gone up, up, up. IWM had a huge run from the March 2020 low through middle part of 2021. It was a very, very big run. I mean, we went from 90 up to 230 in a little over a year. That's like 150% return in a little over a year. We went back down, hit that 50-month moving average, started moving back to the upside, and just recently, last week, we broke out to an all-time high. So when you put all these, when you keep perspective in mind, you look at all these various time frames, I think it becomes a little bit clearer that, hey, IWM is still a healthy area of the market long-term. And now the short term is starting to confirm that another leg higher is underway. And so that's what gets my attention on the IWM from an absolute perspective. Now we can look at the same charts. Let's go on and look at the same charts on the MDY, which is the S&P Midcap 400 ETF. And you're going to see I'm not going to spend a lot of time because you're going to see almost the exact same thing. Here's your daily chart. You got gap support, the rising 20-day EMA, the prior high, which now becomes support. And so you can see on the MDY, I'm going to say probably from about 586 down to maybe about 578. I think this is a key area where you can accumulate and then go maybe to the weekly chart. Let's see what the weekly chart holds here. That rising 20-week moving average is currently at 563. So I think entering, from now down into the upper 570s, and then maybe from a longer term perspective, watching the weekly 20-week EMA, I think that's a smart way to trade this from somebody who's not actively trading in the market every single day, day trading throughout the day. I mean, if you just want to capture gains over time, I believe the IWM and MDY are going to go higher. I think they're going to lead the S&P. I think they will outperform the S&P. I think they're going to outperform the QQQ, the NASDAQ 100. I think this is going to be the area of the market that sees a lot of rotation. And if I'm right, just being in these ETFs would be a good thing. So that's the weekly. Here's the monthly again, just to show you that this is not a bad area. I mean, it's not like, there's so much recency bias in the market, and we've seen so much underperformance by small caps and mid caps over the last 3 years or so that folks don't believe that we can go higher. That they don't believe those groups can lead. I mean, it was only just back in 2021 that both these ETFs absolutely knocked the cover off the ball and crushed the S&P 500 and the NASDAQ 100. But after you go through a period of consolidation and rotation back into those areas, people forget. So it's important to at least keep perspective in mind. So I see, these doing extremely well here over the course of the next, I think probably next couple years. Obviously, we can keep watching. We can see what happens with relative strength. I believe it's just starting to turn to the upside. But let's keep moving on because I want to show you a couple other things. Here's the IWM going back the last 15 years. This is a weekly chart, last 15 years. Again, looking pretty strong. Here is the Dow Jones. So if we're looking at the Dow Jones, here's what the Dow Jones been doing. It looks kind of similar, doesn't it? I mean, if you follow the patterns and all, it really looks like it's very similar to what's going on with the Dow and also with the transports down here. Transports, hit a top back in 2021, took this move down and have struggled to get through that until just now. Just broke through on a weekly basis, getting through key area of resistance long term, exactly the same as the IWM. And if you look at the correlation down here, this is the correlation between the Russell 2000 and the Dow Jones Industrial Average. Almost always in positive territory. Only one time in that would have been 2021. Only one time did we see even a slight move into inverse correlation territory. It's all been positive and mostly extremely positive correlation, meaning that these two go hand in hand. Well, same thing for transports. In fact, I might argue that we stay above 0.75 even more with the transports, the IWM and the transports. So the fact that they're all breaking out together is kind of normal. I mean, this is what they tend to do. They tend to go up at the same time. Now, all this is measuring is if they're going up together or going down together. It doesn't look to see if the IWM goes up 10%, does the Dow also go up 10%? It could go up 2%. They're both moving in the same direction. So I'm not trying to say that the IWM is going to perform the same as the transports and the Dow. I just want to let you know that they tend to move in the same direction and they're all breaking out simultaneously, which I think is very, very bullish. And if you've heard of the Dow theory, of course, the Dow Jones Industrial Average and the Dow Jones Transports, you want to see them going up together. That's what we're seeing right now. So those on the bearish side, I mean, I have so many signals that are telling me this market's going higher. Doesn't mean it's going to be straight higher. I'm not saying we're going to be up 30% the next year, but I believe we're going higher, and I think the small caps and mid caps are going to lead. One other stock that I wanted to, or one other chart I wanted to point out here was the IWM with its rate of change panels down the bottom. So here's the IWM the last 15 years, still a weekly chart, same as before. But down below, I want to just show you how quickly the IWM can move in terms of just 13 weeks. That's a quarter. That's 1/4 of the year. Right now, we're sitting at 7.84%. We have seen quarters where we've gone up, we've seen the rate of change up 40%, 35%. Back at the beginning of 2024, we had it up over 20% in a quarter. 2017, this was after Trump was elected the first time. We were up almost 20% in a quarter. 2013, 20%. Then you got all these back 2010, 2011. My point here is small caps can move fast. And if we go down and we look at the 26-week rate of change, this is a half year rate of change. And you'll see multiple times where we've gone up anywhere from 30% all the way up to almost 60% in just a period of 6 months. And then, of course, down here on the bottom, I've got 52-week rate of change, which, of course, is a year. You can see here back in 2021, we went up almost 130% on the IWM in a 1-year period. This over here back in 2020, 2010, was over 90%.
All right, that's important. So this is what we want to see. If these small caps are really going to move up really well this year, it's time to trade. This is your alt season for the stock market, okay? So when you're looking at stuff like Shiba Inu and all that stuff in crypto land, this is what you want to see in the stock market world, because we have tons of penny stocks you can gamble on and make huge killings. So I need to see the conditions be right. They're setting up to be right, but are they going to be right going into next year?
But we have multiple periods where we've been up near 50%. And the thing is, right now we're at 30%. You think, well, that means we're almost done. Well, think about where we were 52 weeks ago and the fact that we've been climbing. So I just think we're going to continue to climb. And if anything, perhaps accelerate. I think that there are fundamental reasons that are going to drive the IWM at least as much as the technical reasons, maybe even more. And so I'm actually thinking that we're not going to see I don't think we'll see 130% in a year, but I wouldn't be surprised to see us go above 50 and maybe get up to 60 or 70% rate of change at some point, looking back 52 weeks. So I would not be surprised to see a really big push to the upside. Let me talk a little bit about, got a couple other charts I want to show you just in terms of the IWM. This is a chart looking at the IWM relative to the QQQ. So this is small caps versus the NASDAQ 100, which is filled with a lot of the large cap technology names, many of the Mag 7 and so forth. And when you look at this chart, it's easy to want to invest in the QQQ and not the IWM, because the IWM has been trailing the QQQ for almost 2 decades now. We've had periods of strength that you need to be aware of, but for the most part, the IWM has lagged. So I get it. I understand why you would be thinking, hey, it's time to maybe, be in the QQQ and let's ignore the IWM. I would disagree with that for a couple of reasons. Number one, I want you to take a look down here at the bottom. This is the 10-year Treasury yield minus the 1-month Treasury yield. So this is the spread between a long-term 10-year Treasury yield and a short-term 1-month Treasury yield. And as that goes up and down, it can have different impacts on the market. If you notice, for the most part, throughout this entire underperformance of small caps, this spread has been going down. And it's only during periods when we see, when we've seen the, here we go. So I've got these vertical black dotted lines to mark some significant short-term bottoms in this relative ratio. In other words, we go through periods where the IWM outperforms the QQQ. Here was one brief period, lasted about 9 months. Here was one that probably lasted close to a year. Here was one that only lasted about 6 months. But during those periods, what I want you to notice is what was going on with the spread. in every instance when we were making moves to the upside, look at the spread going up, the spread going up, the spread going up. This is what I'm looking for. I believe the spread is going to go up. I think that the inverted yield curve is going to uninvert, and that spread, as it widens, is a massive benefit to many of the small and mid-sized banks, which, you know, if you're a small business, you want the banks to be doing well because it makes it easier for you to access capital to grow your business. So small caps, when this is coming down, it kind of makes sense to me that small caps would likely underperform as a result of it, because you're narrowing the profit margin, the net interest margin for banks. And that's most important on small and mid-sized banks because they don't have as many other huge revenue streams and other areas of profit centers like the money center banks, the huge banks like JP Morgan and Citigroup and Wells Fargo and Bank of America and PNC and, all of these big, huge banks. Smaller banks rely more on traditional ways of making money, like their spread. And so as the spread comes down, you're going to see that it's a more difficult environment for companies in that small cap and mid cap arena that rely on those smaller and mid cap banks to offer them access to capital to grow their business. And it's not just for them, but it's for their customers. If you're a small or mid-sized business and you're selling to other small and mid-sized businesses, many times if those companies that are buying from you can't access capital, they can't grow. They can't buy your products. They don't have the capital to do so and the resources. So it starts to make a difference for small caps when the spread begins to turn. And you can see down here, I've put another recent, I'm trying to drag this thing. There we go. You can see here that we've made this big move up in terms of the spread widening. Well, we're actually moving toward uninverting. Right now, we're still uninverted. I could draw a line here at this zero line. Uninversion is rare. It doesn't happen very often. And what it means is that your short-term rates are higher than your long-term rates, which rarely happens. Sometimes it'll happen with inflation or with really strong economic growth, because short-term rates go up quickly in both scenarios. And so they could result in inverted yield curves. But anyway, I think we're going to uninvert, and I think this yield goes up. And as I just showed you, that tends to have a very positive impact on how small caps trade relative to the QQQ. And also, the rotation into the QQQ versus the IWM, not only has it been going down, but it has been accelerating over the last 5 or 6 years. Probably it had a nice little channel, I think it was in for a while, but then it really accelerated to the downside. And so I just think there's a lot of money that is ready to rotate back, even if it's just for a year, maybe 18 months. But I think during that year, 18 months, we could see a massive explosion to the upside in small caps. Let's do one more chart here. So this is the semiconductor group. And I want you to look at the semiconductors. Now, semiconductors did well. This is a 15-year monthly chart. And semiconductors did pretty well, rising from about 1,000 to 5,000 right here at this low. So it was up 5 times. I guess 400%, but up 5 times from 2010 through 2022. So over 12 years, it went up 5 times. It went up another 3.5 times in 2 years. That's how much semiconductors have ripped to the upside over the last 2 years off of the cyclical bear market low that we saw in 2022. And now everybody thinks that's the best trade, since sliced bread. And it was, and I think this is still a really positive group. But look at all the struggles we're having to get through here. I think that we're sideways consolidating and maybe still going to struggle for a period of time. And what do you think is going to happen if I'm right about the spreads picking up and getting bigger and banks and small caps and mid caps starting to move? What do you think those folks holding on to semiconductors are going to do when they're stuck in a group that's not breaking out, going nowhere? I'm already starting to read articles. What's wrong with the semiconductors, this and that. Imagine what they're going to think when after small caps, the IWM is up 20, 30, 40%. I think money is going to potentially pour out of these areas and into small and mid caps. I think other areas that have become bloated over the last 10 or 15 years, we're going to see some of that money rotate. I mean, I don't think it's a stretch to assume that retail traders aren't going to follow the momentum. I think that that's exactly what they do. They see what's moving, and all of a sudden, that's where they want to be. So I think right now, the relative outperformance of small caps that we've seen since July. Here was the bottom right down, well, the latest bottom right here in July. Look at this move. I think it's been somewhat masked. I don't think a lot of folks realize how much small caps have been outperforming during this transition, if you will, going from a inverted yield curve back to an uninverted yield curve, and what it's done in terms of relative strength in the small caps. Now I pulled up the 144-month rate of change, and the reason I pulled up the 144-month is that's roughly 12 years. 12 times 12 months is 144. So that essentially takes us back to 2013, which is when the S&P 500 cleared its 2000 and 2007 highs. And that was when a new secular bull market maybe wasn't born, but was confirmed. A lot of people like to go back to 2009, say that's when the bull market started. Well, you would have said the same thing in 2007 when we topped. If you looked back to 2002 low, we had this huge run up, but we didn't make the breakout. We ended up going right back down to a new low. That wasn't the beginning of a secular bull market, right? We didn't know we confirmed until we had the breakout in 2013. That's when, in my opinion, we were ready to take off. And that's why when you have long periods of consolidation and you get a breakout, those are sometimes the absolute best breakouts. But look at the rate of change over the last 12 years on the semiconductors. I mean, that is 1,776.42%. That's not bad over 12 years. I mean, if you can put your money away for 12 years and you knew you were going to get that kind of return, I think you'd probably take it. And here is what that looks like. Look at this rate of change and how it has absolutely exploded over the last 2 years because of the huge move and how rapidly we ran from under 5,000 to over 21,000, or up to about 21,000. 4 times in 2 years. And like I said, in the prior 12 years, we went up 5 times in 12 years. 4 times in 2 years is pretty ridiculous. So, we topped on semiconductors in June. The day they topped, I wrote an article about it, Stock Charts. I was like, stay away from this group until you see another high, because it was a topping candlestick, and I thought it was going to last for a while. I didn't know how long, but we're still seeing it. It's still having an impact. You're going to have leaders like NVIDIA that'll continue to do well, but look at the ones that aren't doing well. Look at what's happened to AMD. Look what's happened to Applied Materials, which got crushed on Friday after they reported earnings on Thursday. Look at what's happened to Lam Research, KLA Corp, many of the others. We've seen a huge drop in some of these semiconductors since that June top. So anyhow, I just think this is going to lead to a lot of rotation. I think that we're going to see the rotation. I think it's going to go into the IWM. Here is the 12-year rate of change on the small caps, 228% versus 1,700 on semiconductors. So listen, there's no doubt semiconductors, that's where you want to be. And when they break out above the 21,000 level, you're going to want to make sure you have a piece of semiconductors. I will. But will they outperform the IWM going forward in an environment with the spread getting wider and wider? I guess you could be the judge of that. I believe small caps are going to crush as we go forward. All right. Let's take a look at some ways to find good small and mid cap stocks. Now, I'm just going to show you the way we find it at Earnings Beat. So for those of you who do want to end up taking out.
Okay, I think that's good enough of a thing. To cover a Samantha LeDuc presentation. It's 1 hour though. So I think I'll save that for tomorrow. We're already at 1 hour now. And what I want you to look at in the morning is, let's look at micro strategies, okay? So look at Bitcoin into the pre-market hours and see how that goes. See how Bitcoin actually is moving and see if we can get a day trade off of this. It looks like it's trying to recover right now. I see it trying to recover. Yeah, looks pretty good. Here, let's look at the 40-minute. It's definitely trying to recover. This could be it. It could be bullish tomorrow. If it is, then you can use this ETF here, SMTU. Okay, so this is 2x long of MSTR. So if MSTR goes up 10%, this will go up. Now, if it's going to crash, then use SMTZ. MSTZ will go up when MSTR goes down. So if Bitcoin is moving down and MSTR is moving down, then you can use this one, 2x, go in the other direction. So if MSTR is going down 10%, this is going up 20%. Okay, MSTZ is for the bear. MSTU is for the bull. So if you are bullish, use the letter U. Otherwise, use the letter Z. All right, figure that out. Okay, remember that. That's what I'm using to trade this sucker. And remember SMCI tomorrow. I don't know if it breaks out. If you want to take a chance, you can use SMCX. Goes up 2 times up. So if SMCI really wants to go up the 3 days into Thanksgiving, yeah, shit, go for it. Go for it. Jump in there. So we'll see how it goes in the morning. That's just something to recommend. So this is SMCI and then SMCX. It's 2x. Okay. All right. If you want to take the risk, take the risk. Otherwise, use options. You can figure this out using options. You can use MSTR puts or whatever. You figure that out if you can find them to trade. Otherwise, I just use the ETFs. But yeah, good luck. I think Ruby has started to stream. All right. So they're continuing their Vegas stream. We'll see what happens. Okay, and I'll see you guys whenever I get a chance to update. But yeah, I think this is the beginning of a very good time in trading small cap stocks and mid cap stocks and all kinds of and penny stocks, because conditions are ripe. And I think I've mentioned that semiconductors are going to take a pause. So he confirmed that as well. He said that is probably what he thinks is going to happen. And Samantha LeDuc said if SMH semiconductors are going to go up, I think she said it will be the index itself for the ETF for this particular one. So let's look daily here. I think she said 270, right? That's about here in this gap up here, 270. So right now we're at 244.62 cents as of Friday's close, up to 270. So you can also trade SOXL. So SOXL, 2x of bullish. So yeah, I've been buying here after Nvidia's earnings. So I've been getting it at 27-ish. So hopefully I can get out at, I think I said was around 35 or something like that. That's what I said. That'll be good. But yeah, I can continue on. Maybe I'll go back up to 40s. So that's another trade that you can swing for the next month. Hopefully the next earnings will be good. I said ADI, Analog Devices, was going to have earnings on Tuesday, but the big ones will be Avago, Marvell, and MU Micron. Those Avago, Broadcom, basically AVGO. Those will be in December though, so it's going to take a while. So maybe you'll see a pump into New Year's, and then just before New Year's or around just after New Year's, first week of January, once you see it's ending, then you get out. And I think after that, the NASDAQ will have a hard time moving up. But the small caps, IWM, all that, BitCap, MDY, the ETF, those will continue on. All right. Okay. All right. I'll see you guys. Good night.